Stop the presses. Money just got cheaper. The OCR has dropped 50 basis points, which is finance speak for borrow like there's no tomorrow. The popular Dave Whitburn joins us next to interpret this for you. The Reserve Bank just slashed the official cash rate, and if that sentence made you yawn, don't worry, your mortgage is very interested. Dave Whitburn is a real estate expert and best-selling author. He was president of the Auckland Property Investor Association and continues expanding his 22 million plus property portfolio. Dave, is this a bold economic maneuver or just financial duct tape on a sinking ship?
A little bit of both. However, it's not bold realistically. It is a financial maneuver. It should have happened last year. It's too late to cut them like this. The official cash rate should have been cut a lot earlier. There's a lot of damage done by both the previous government with its very reckless and overstimulatory policies in conjunction with the OCR being slashed, and arguably it should have been raised a little bit earlier, then we wouldn't end not as far. So as a result, we're unwinding a little bit of a mess. There are a lot of borrowers in some pain. Some people fixed some loans probably for not quite the right prices for a little bit long as well. And unemployment rate's been going up. The GDP is not doing particularly amazing things. The country's not as productive as it should be. We're falling behind some of our colleagues there. Most economists have actually been calling for OCR cuts a lot earlier and later. So it's been interesting to get a cut of this magnitude. And I guess it's all very nice for me to be a critic and say that it should have got cut earlier, but it's great news now, and it is going to open the way for some stimulatory policies. And who knows, this could mean that there's a flood of lending to come on board.
Yep. So, some people think OCR dropping means interest rates are going to drop. Do we think that this 4.99% rate we've seen recently is going to keep getting lower? Or
this 4.99% rate fixed for 3 years is from Westpac is pretty hot there. The other banks really struggle to match it in many cases. Some of your colleagues here across with the over 50 staff on the floor, as we've just come out together from watching this impressive briefing on the OCR, are saying that they've seldom been able to get them to match this rate. But I think now this is going to be a signal there. The catch is the OCR directly linked to the funding rates? Well, yes, it is. It's just that in rates like the 3-year rate, most of the depositors don't want to have a 3-year term deposit. So as a result, a better rate to look at are things like the swap rates, because these monies are raised on international money markets. So the banks are wanting to preserve their net interest margin. They wanted to try to grow that and have that in sort of 2.3 to 2.5% range. So by the time they've done that, paid a little bit of money to hedge it, because often they're going to borrow in a different currency, such as the US dollar, it's going to actually translate to not the full cut coming through. Maybe only half of the cut's actually going to get passed along, which would be interesting.
Yeah. And so how are property prices, how's the property market going to react, do we think?
Well, it goes down to the economic laws of supply and demand. And what this does is it doesn't do anything to supply, that's decoupled from this, but it helps demand. Why? The bank's test rates are highly likely to come down. So they mix around, they're at 7 point something at the moment, depending on which bank you're with. These will drop accordingly. And this means that they'll have more borrowers being able to be eligible for this, and it also means that there's a bit less outgoings as well, less financial pressures there, whether it's for your own home loan servicing or otherwise your rental property loans. That's a helpful thing. So I expect to see this as a positive measure for the market. It is stimulatory. It's more like to see house prices go up.
Yeah, great. Well, I mean, we have had a bit of information lately about so many people being on this 1 year or shorter rate.
Absolutely.
And help the listeners see what was the case around 2012 with so many people floating.
Yeah, I can take you back even further. Initially, I started investing in 2002 as a very young fella, and it was obviously pretty green then, and didn't really know exactly what to do. So I just decided to self-do some interest rate strategy of having some floating, some 1 year, 2 year, 3 year, 4 year, and 5 year. It probably really irritated my mortgage brokers having the loan split into 6. Particularly when it's under $200,000 loan. However, as the prices were so good then. However, what happened was in the mid-noughties, we were getting the number of people that were floating was quite low. I can see in the graph there as we just getting into the GFC in 2008. it looks like it's give or take around 20% of people are floating, and there are plenty of people that are actually going to fix for over 3 years and two-year rates as well. However, when the GFC hit, that started to make people panic a little bit, and what happened was some of these interest rates were quite high. That didn't help. The interest rates had been put up, surging in 2007 and 8. The floating rates were above 10%. The retail rates before discounts were being applied. Then as the interest rates started going down, then more people were thinking, oh, well, let's just keep doing it. Let's float to 6-month loans as well. So we saw that peak that you talked about in 2012, where over 60% of people were actually on floating rates. That was really interesting. That came down, and then a lot of banks were actually competing, particularly interestingly, on the 2-year rate, which you can see marked in here, and you can see some big spells there. That used to be a hot thing to compete with. And then in more recent times, it's been the 1-year rate that's been quite a thing to compete with. So this Westpac offering is at 4.99% for 3 years is great now. But what this actually means is, in terms of the relevance to you, is you've just got to be careful with your portfolio strategy. The last thing you want as an investor when you've got a decent portfolio is to have all your pricing, all the rates coming up at one time. So it is important to have a little bit of an interest rate averaging strategy. For some that have been equities investors, this is the equivalent to like a dollar cost averaging strategy. So all it is just working in with your financial advisor, perhaps it's some of the hardworking team on the floor there, to make sure that you're not exposing your and your family's financial future by having all of that debt coming up with once. And that's something that I think that you do really well, and the pricing is going to get better. So that's why many people are going to be impacted by this OCR. Right now, we've got something like, it does vary, of course, every month, but I think it's certainly over 75% of people that have their debts up for repricing between now and the end of this year.
Yeah, great. And so prediction, I guess, is still for growth in the market. And talking to a Westpac chief economist the other day, he was saying 7% growth this year and 5% again next year. With the OCR dropping now and again predicted for another drop soon, you think this is just going to push house prices up?
Absolutely. I talked with other bank economists, and I really enjoyed your interview with BNZ chief economist Mike Jones too. And before that, we had chatted with Kiwi Bank and ANZ, and we've been trying to work out where this is. Of course, it's crystal ball gazing. There are a lot of people will mock economists as being as good as weather presenters and things like that, weather forecasters. But the reality is that there is some pressure on the economy. The unemployment statistics have been rising. And most importantly, the Reserve Bank is targeted to keep inflation between 1% and 3%, consumer price index inflation. We're in pretty much the middle of that band now. That's an exciting thing. So that means that they can actually help the economy out, help businesses have that confidence to spend money on CapEx and to go out and be confident enough to hire people. So I expect that there may well be, and there should be, another cut there. If we had an even larger cut now, then that wouldn't be necessary. But there's still some pain, and I think another cut's justified. It's just bear in mind the same thing. Will all of that cut be passed on by the banks? History shows that it probably won't be.
Yeah. And we've been talking about you're wanting to get your son into property investing. Are you going to try and accelerate that now that he's going to buy in the next 6 to 12 months?
Absolutely. He's a passionate person. He loves economics. That's his favourite subject. He's in year 12. He's unfortunately not at the age of majority, so you'll need a little bit of help. So just set up a trust for him to do that. I will loan him that money, and he will have to pay it back. Otherwise, it's don't want to create any entitlement mentality or anything dangerous like that. But it's something that I want him to do, to teach him, so he can go out and screen it and find it. He's able to screen stocks to purchase and analyze them. It's a key competency there, and of course, schools don't teach you how to do property investments, so I think that's going to be a great one to do it. I just put my own biases in there in terms of making sure that you've got big land and extremely strong positive cash flow, but I think that that'll just be a really good way to do it. Then I can transition the management to him when he's a little bit older to do it, but what a great start that could be, and I'm so proud that he's done a few things. He's read your book, Andrew, and he's quite impressed with it.
Well, I'm looking forward to helping him borrow some money and refinance later on as well. So
Thank you.
any questions about the OCR, leave them below, and we'll see if we can answer them or drag Dave back to give us his 2 cents. Don't forget to subscribe, and we'll see you again soon.
Financial freedom.
Hello there.